Let's welcome in a very special guest at this moment. Prabhat Awasthi, Managing Director and Head Equities at Nomura India, is now joining us. Prabhat, thank you so much for joining us this morning. First, your initial take on the budget. Why did the markets rally? You think there was no negative shock and that was the key positive for the markets?
Yeah, I think you absolutely rightly put it. There was a fear of capital gains tax. I think that was one of the reasons why the market rallied. And I think it was not a populist budget. It was, there was fiscal consolidation slightly ahead of where the consensus was. Very realistic budget also because the revenue assumptions are extremely realistic. So I think all in all, if you look at the budget itself, it could be, called a bit of non-event, but there were no negative surprises for sure. And it was fiscally responsible, I think. I guess that's what market liked about it.
Right. As far as fiscal consolidation is concerned, it was not very expansionary. In fact, you would still look at it 3.5 versus 3.2 is a good contraction.
I think you have to look in the context of what they're sort of budgeting in revenues. You can always, so if you look at the revenue growth that they've projected, it's far lower than what they achieved last year. Obviously, last year they had additional taxes because of the fact that they were able to raise taxes on oil, etc. The assumptions are extremely for a very, very slow revenue growth. And I think they're being realistic about the fact that they had a demonetization and some impact of that will flow through in lower revenue growth this year. So in that context, the fact that your incremental revenues are half of what they were last year, if you're able to achieve, fiscal consolidation under that sort of revenue scenario, I think it's a very good result. So I think, and also I think the other important thing within that fiscal construct is the fact that how you spend your revenues that you're getting, and the growth in capital expenditure is higher than revenue expenditure within those limited resources that they have, which I think also is a reasonably sort of good outcome, despite the fact that you had demonetization and you have state elections.
Right. Considering only the expenditure side, you think it's a good mix of rural as well as infrastructure that the budget will be focusing on?
So I think in rural it's more targeted, I guess, and I would say that there's a bit of rhetoric compared to the actual numbers. For example, the NREGA expense is actually flat year on year, while it is much higher than last year's budgeted amount. But the fact is that NREGA expenses last year were much higher than budgeted. So on revised estimates, there is no growth. So in some of the things, obviously, some stuff like rural housing, etc., there clearly is a very strong targeted spend. But these spends that they're talking about are more asset creating sort of expenses rather than pure income generation expenses. Basically, I think this government's target has been not to do pure income enhancement, but actually link that to some sort of asset creation, which is a positive thing. So I think rural spends have to be looked at in that context. I don't think they're like extraordinarily high because end of the day, the overall revenue expenditure is only growing close to 5%. And obviously there is more emphasis on capital expenditure. But those numbers, end of the day, in overall GDP context, are comparatively limited. But, obviously they have done more for roads, they have more for railways, and a lot more for affordable housing. These are the three areas where they've sort of continued to focus a lot in terms of expenditure in this budget.
So, say if one investor was positive on India before the budget, there is no reason to change that stance?
Yeah, I mean, to the extent that budget, I mean, if there was an expectation from the budget that it'll be expansionary, etc., obviously this budget is, very sort of fiscally responsible budget. So if they were positive on India because of India's fundamentals, I don't think there is any reason for them to change their stance.
Prabhat, just request you to stay on for a minute. Markets have just opened. ICICI Bank is up about 0.5%. ITC was one of the top gainers yesterday. It's up about 5 rupees today as well. Hindalco is down 1.3. Idea Cellular is flat with a negative bias. GAIL is down about 1.2%. GAIL also went up yesterday. Tata Motors is flat with a negative bias. ITC is now the top gainer, 2% higher, 275, 276, 5 to 6 rupees higher. Very strong volumes. One would say that the hike in the cigarette excise which has happened was on the positive side. Yesterday also ITC reacted, and today also it's up about 2.5 to about 3 odd percent. So that's the top gainer. Sun Pharma is down about 0.7%. NDTC is flat with a positive bias, and Wipro is down about 1%. Tata Motors on your screen is down about 1.5. It's reacting to both the numbers. First, what's happening on the JLR side, where they declared the USA numbers last night. Hero MotoCorp is reacting to its numbers. Not that great set of numbers, 1% down, 3,246. M&M numbers came post-market hours, 2% decline. But I don't think that this reaction is because of the numbers disappointment from M&M. It's maybe the auto sector went up too much yesterday, and today it's down about 2 odd percent. Some stocks that are in news. Sonakoyo is down 4%. 84 is where the open offer has come in from the Japanese parent, but it was expected to be slightly on the higher side. So that's down about 4%. Advanced Enzyme is up close to 3%. 1,852 for Advanced Enzyme. 15,000 shares traded. Hexaware is up about 1.5%. Very good volumes at the start. Cipla is up marginally, about 0.2% higher. And TeamLease is also a stock which is in focus. It's up around 2.5%, but no major volumes. Dishman has got an EIR for one of their facility. It's an interesting facility, 3% higher. 1 lakh shares traded for Dishman Pharma, 236 for this name. Prabhat, just looking at the overall budget, one of the sectors that went up yesterday was the banking space. You think the fiscal deficit that you just spoke about, the overall borrowing numbers, banks are one of the key beneficiaries of this budget?
Yeah, so I think from the perspective that, the budget, leaves a fair amount of room for rates to remain reasonably low, because you essentially have not, caused, sort of not crowded out the borrowing space. Actually, borrowings are going down on a net basis. Leaves a fair amount of ample liquidity in the system. And I think that and plus I think some sort of growth, infrastructure spends, etc., is also being taken a bit positively by the market. But I think, overall, basically, so far as the budget is a sensible budget from macro perspective, banks will celebrate that.
Right. Mr. Awasthi, is corporate India going to be disappointed that the timeline and the roadmap laid down for a cut in corporate income tax rate was set 2 years back, but nothing happened in this budget for large corporates? Or do you think that the move that the finance minister has made to give relief to SMEs and MSMEs by cutting the corporate tax rate for them to 25% will be good enough?
So I think if you hear the budget speech, what the finance minister essentially said was that the tax rate for these MSMEs, effective tax rate for the bunch of corporates for which he has cut tax rates is about 30%, while the effective tax rate for the large corporate is about 25.9%. And frankly, the whole premise of tax cuts for corporates is essentially to do with the fact that they will, when they cut the tax rates, they'll also remove exemptions. So I think so in my view, I think they have created a level playing field between MSMEs tax rates and large corporates who avail, many of these sort of exemptions, so to say. So I think if they had sort of moved to a lower tax rates and cut exemption at the same time, because the corporates are already sitting at 25.9%, logically speaking, there would have been some corporates would have benefited, some corporates would have lost out. Because you have to essentially look at effective tax rate that is paid by the corporates today. So I sort of think that while there might be a bit of disappointments, but it will largely be limited to the guys who are paying full taxes at the marginal rate. But the whole corporate India, the large cap space, is not paying full tax rates. And I think therefore it could well be that they will wait for some time before when they feel that exemptions are starting to run out and the effective tax rate is rising, and then they bring down the overall tax rates. And also remember that their revenue estimates, the growth in corporate tax revenues is about 9%, a total of 9%. It's a very, very muted growth. And given the fact they're only counting 5% excise duty growth, etc., means that the room to cut tax rates massively was also very limited, because you essentially are not budgeting revenue growth. So if you cut taxes further, you are further constrained. So I think it is this construct of lower revenue growth, and also by the fact that the effective tax rates for larger corporates is still very close to the so-called 25% rate or marginal tax rate eventually. I think both these probably would have been the reason why they have not done it.
Right. Mr. Awasthi, there is also a little bit of disappointment that the government didn't, use the demonetization bounty. When a lot of people suffered inconveniences when cash was scarce, whatever the government has got out of demonetization, it didn't come across that a balm was being given to those who faced the inconvenience. The demonetization money that came in, no clarity on how. I mean, it's been put into productive uses, but it just sounds like what we've seen previously. It didn't come across as how this money is being utilized for the benefit of people who suffered the inconvenience.
So, I mean, first of all, I don't know what bounty you're referring to, because if you look at the expenditure that the government has budgeted, revenue that the government has budgeted doesn't seem to be pointing to a lot of bounty. And the fact of the matter is that we know that most of the money that was demonetized, bulk of it, and we don't know the final number, has come back to the system. So there's actually effectively no bounty. So if they don't have a bounty, they don't know, they don't have the money to spend, actually. I think that's a very simple answer to your question. Yes, there was an inconvenience, but the government's view essentially at this point in time, at least the modified view, is that they are going after black money, and that will cause some inconvenience. And the fact that, if you're, again, I'll emphasize the fact that they don't seem to be counting any extraordinary money coming out of the demonetization process in the budget, and therefore there's just no room to sort of alleviate that pressure. And finally, about the disappointment, the fact of the matter is that from the perspective of markets, they have done a huge rally post-budget. So that disappointment, at least in marketplace, is not very clearly visible. It seems to be saying something else.
Which sector do you think will be the biggest beneficiary of the budget? Is it going to be housing? Because we already had announcements coming in from the Prime Minister on New Year's Eve, and now more thrust being given on affordable housing. It's got the infrastructure status. Do you think that is going to be the biggest beneficiary? Will listed real estate companies actually benefit from what was mentioned in the budget for housing?
So I think there is obviously for affordable housing there's a lot of stuff in the budget, no doubt about that. But there is also a negative in the budget on housing, especially the higher end housing, where the interest expenses that you could set up against your income on a second house, that the loss on the second house could be offset against your regular income, has essentially been taken out. And that, I think, will probably hit the organized real estate somewhat. Affordable housing, not every player that is there in the market is in affordable housing. A lot of them essentially are in higher end housing, where this sort of investment demand that will probably be hit on account of the tax rule changes now. So I think we'll have to basically wait and see whether this change in disallowance of interest expense set off will actually hit demand for higher end real estate. So I think it's not an unequivocal positive development for organized real estate. For affordable housing, yes, but affordable housing could come through from a very disorganized sort of sector, because you're talking about much lower tickets than is done by organized retail players who are listed on exchanges. Maybe they'll have to change their business model and focus on affordable housing. So I think it's ancillary stuff which might do well. I mean, for example, if the affordable housing takes off, maybe cement demand, which has not seen that much of a pickup from real estate, will start to look better. So those ancillary demands, sector demands might be actually a better way to play this than by just playing organized real estate, because I'm not yet clear as to the positive, the negative impact that will happen because of the interest disallowance.
Prabhat, as you initially said that budget is now behind, and it was no negative surprise came in. Markets will now start to focus on earnings. And what are your sense about FY18 earnings? We've got Q3 numbers. Impact is not as high as what the street was predicting. Any sense on FY18 numbers now? Still continue to be optimistic?
Well, again, I don't know optimistic, but there's a number which people forecast, and I think there is not that much downside to it. So we don't forecast numbers; we just look at consensus and see if there is a possibility of a cut to those numbers. I just feel that these numbers have become realistic. Remember that post demonetization, the earnings numbers have been cut by about 3%, 3 to 4%. Our own estimate was that demonetization will cause about 3 to 5% decline in earnings, not more than that, simply because of the fact that when you look at index, it is heavily weighted towards things like oil and gas, technology, pharmaceuticals, banking, and especially the consumer banks like HDFC Bank or ICICI Bank, where the impact of demonetization is comparatively limited. And therefore, the visible market or visible index is really not impacted that much by demonetization. That's why I don't think earnings are getting impacted. So we are not optimistic, being realistic about the fact that the most of the earnings cuts that had to happen happened very quickly, and therefore there was not going to be that much of disappointment in earnings, which is what is panning out at this point in time. There was a lot of bearishness around that demonetization will kill earnings. I think that was misplaced, and that is what that's why market also rallied once the earnings season started. I don't see a change to that. I mean, earnings will continue to grow at whatever the forecast rate is, about 14-15% is what they'll do.
Right. One sector that has not performed well has been IT and Pharma. Do you think it's with what's happening into US, will the outlook for numbers for these sectors, despite they being big underperformers, would continue to remain weak?
So I think both these sectors have not only what is happening in the US, but the fundamental sectors had started getting challenged from before. It's not the change in the guard in the US, that is the new president and the new policies which are alone responsible for the performance and the performance that started for these sectors. Especially, IT obviously has an added headache or challenge of H-1B visa issues. But even before that, the growth rates had started slowing down dramatically, despite the fact that the overall economy globally and especially the US economy is doing well. So there has been a shift towards, towards more automation maybe or more cloud services. But end of the day, there has been less participation in the incremental growth. Or compared to the past, and the growth has picked up in US, IT has tended to pick up. It's not happened this time around. And then you have added challenge. So basically, it still continues to be a problem, and therefore stocks typically don't perform when you have these kind of challenges. Pharmaceuticals, what started with a regulatory challenge now. The fact of the matter is that the comparative opportunity for Indian generic players have been lesser because the patent expiries, that whole story has slowed down dramatically, and therefore you're not seeing and the price increases are also not possible. So again, I think part of the reason why these stocks have underperformed because their growth rates have slowed down fundamentally, and now on top of that, obviously you have some sort of threat what will happen if the US administration cracks down on, for example, drug companies. I mean, that's an overall headache for any player exporting into US, including Indian players like pharmaceuticals and IT. We think that they continue to be challenging sectors next year.
Prabhat, thank you so much for taking out time for us. Always good to get in a perspective. That was a view coming in from Prabhat Awasthi.